Good morning, Richard Calhoun, Creekside Realty, 40 years working buyers and sellers. We're talking about Silicon Valley real estate market using graphs, week number 14. We'll come back to this slide in a minute or two. This is the first data slide. It's showing the percentage of current inventory, current offers, demand, and new listings on the market compared to the 5-year median. The 5-year median is 2015 through 19, the 5 years before COVID, 5 great years. So we start down here with the blue line. That's showing that we have about 75% of the inventory you'd expect globally. That's Santa Clara County, San Mateo County, single family homes, condos, and townhouses. So there's a shortage of inventory. Then you have the gray line, which is the number of new listings. This is how many sellers are coming into the marketplace. The gray line has been basically at or above, and mostly above, the yellow line. So you've had more sellers coming on the market than you would expect. What the real story is the burnt red line up here. That's the demand, the number of offers that are accepted. And you can see that that's consistently been above the yellow line. And it's the surplus demand that is driving the marketplace, that's eating up into the inventory and causing the current market conditions. Notice that the inventory goes up and then the sales goes up right afterwards. And there's this sawtooth thing, and that tends to indicate that we are being limited by the inventory available. Here's another clear example. The number of new sellers coming on the market dropped, and so boom, a week later, the number of new offers dropped. Then the number of new sellers came back on the marketplace, and actually the buyers were waiting and jumped on it, and up went the number of new offers accepted. So there seems to be a direct correlation pretty closely. I'd expect there to be a lag of a week. There isn't always. Now we're looking at the raw count. This is days of unsold inventory. This is the supply-demand ratio. This is the single biggest indicator of what's going to happen to pricing in a free economy. So here you'd expect the raw data to be right on the yellow line. That's the 5-year median. Anything below 40 is a red hot seller's marketplace. So instead of being at 28 days, something like that, we're down here somewhere around 18 days of unsold inventory. That means we'd take 18 days to sell every existing property on the MLS if there was no new properties coming on the marketplace. But the real key is you're strongly in a seller's marketplace. You're more in a seller's marketplace than you were in my 5 base years, which were all 5 good years for a seller in appreciation. Now we're looking at the pressure the buyers feel. This is the sale price to list price ratio. And I have changed my dotted line up here, which is the best month we ever have, has changed now from May of 2018 to March of 2022. And I will actually go on record and say I almost suspect that that will only last for 1 month before I replace it with April of 2022. And why do I say that? I say that because burnt orange line here, April the 2nd, is stronger than the dotted red line, as well as the purple line, which is 4-9. So you have 2 out of 2 weeks so far that are outperforming your best month ever. And so if that trend is even close to continuing, we will replace the best month ever. But now we do have to get 5 weeks because my calendar month starts on the 1st of the month. So for March 1st and goes for 35 days. So this data is the dotted red line is through April the 4th, even though April 1st through 4th is in the following month. I do that because there's a huge weekly cycle and it skews the data, in my opinion, if you don't do that. But the big takeaway here is the most recent lines, the solid lines, are all the best lines. The dashed lines are the next best lines. And then the dotted lines are the oldest and they're the least performing, and they're all still very good years. For example, if you came down here and said 35% of the sellers were getting more than 10% over their asking price, that's a pretty strong marketplace. And that's the worst line on this graph. This graph is very similar, but just 12 weeks so that you can see it a little bit clearer. So same concept, the 4 most recent lines are the solid lines up here. You can see they're the highest. The dashed lines are intermixed with them pretty well. And then the dotted lines are the oldest. So basically, the last 9 weeks have been outperforming where we were in February, early February, end of January. Our transactions were negotiated in 2021. Now we're looking at some of the key breakdowns of the different areas. So we're looking at in active inventory, what do you get? You get only the amount of inventory. So the red number indicates that you have a hot market condition, a seller's market condition, and that's because in Santa Clara County single family homes, you only have 62% of the inventory you'd expect to have. Now you go over to San Mateo County, which isn't very far away, you're at 96%, and that's just at the beginning of a balanced marketplace. So there's a significant difference between the level of inventory available in Santa Clara County and what's available in San Mateo County. And then if you look at Santa Clara County condos, you're at 91%, and that's also a seller's marketplace. The column just to the right is black because at 97 just last week, that was a balanced marketplace. So there's been a significant drop in the available inventory just in the past week. And the Bay Cities is blue because anytime you're above 115%, that would tend to indicate cooling marketplace. But I have looked into this, and the reason I crossed it out, it's accurate data, but it's misleading. It's misleading in the fact that there was a lot of new condos and townhouses built in Redwood City from 2015 through 2021, and those are not really in my base year because the new builder typically only lists the model homes or nothing at all and relies on their own advertising. And so those weren't included in as available inventory, and they weren't even built in a lot of cases. You know, a construction that was built into 2020 would not be in any of my base years. So the volume of available properties increased dramatically, which is why this number would indicate a cooling marketplace, but it stands alone, and we'll get into that in just a second. So then if you move over into bringing in offers, you get the rate of sales. So now you can calculate the days of unsold inventory. And again, anything under 40 is considered to be a red hot seller's marketplace. So you can see across the board, you have 16, 16, 18 and a half, and 14 days of unsold inventory. So a very strong marketplace. Now I'll comment on the 14, that is the hottest area, and yet it's got the most available inventory. Well, that just indicates that the demand for the homes that they built, the condos and townhouses they built in the Bay Cities in San Mateo County was there. And so now when that extra inventory comes on the marketplace, it's selling very rapidly. And that's why I decided to cross out the fonts. I thought there was an error in my data for the longest period of time, and I finally investigated, and now I feel confident again. Now, when you move over to closings, you gain about a 4 or 5 week delay because you have to let the escrow close to find out the sale price. So Santa Clara County, 92.6% of the sellers are getting more than their asking price. That's phenomenal. We have seen micro market areas, not this week, but I think it was the last 2 weeks, like Redwood City was at 100%, which is even hard to believe. But 92.6 for the whole county is pretty astonishing. San Mateo County is not far behind at 90.4%. You go down to condos, Santa Clara County is coming right up at 90%, and Bay Cities in San Mateo County is at 80.5%. Then you look at the magnitude of overbidding, and these numbers, especially in the condos and townhouses, have come up. They were down around 5 and 6%, but 117%, 17.6% above the asking price in Santa Clara, 16% above in San Mateo, 12% above for Santa Clara County condos, and 9% above for Bay City condos. And then on appreciation, I'm using the entire calendar year 2020 as my base. So in single family homes in Santa Clara County, the prices are up 40% from 2020. San Mateo County is up 29%. Condos and townhouses in Santa Clara County is up 31%. And in the Bay Cities, it's up 6%. And you might say, well, Richard, that's in the 3 to 5 range, so it should be black. Not really, because at this point, we're almost 2 full years of appreciation. So these numbers now, because this is per year, would be more in the 6 to 10 range. And at 6.3, I think that's just a little bit weak to put it as neutral, but it's definitely on the higher side of cold or the cooler side of neutral, depending on how you want to look at it. Now we're going to talk about a newspaper article that came out in the Mercury News. And here's the URL. You can go get it. It put out on April the 6th. And what was interesting is they basically were talking about home shoppers stayed out of the marketplace in February of this year. And they based that on closed transactions. Well, closed transactions take 30 days to happen. So if your February volume was down, that's not that the shopper stayed out in February, that shopper stayed out in January. The other thing that was pretty interesting is they said sales dropped nearly 20% over the previous February. They failed to mention that February of 2021 was essentially an all-time record high because of the pent-up demand from COVID. Remember, COVID was announced on March 17th of 2020. We were locked in place. The market opened up on May 1st, I believe it was, got going by middle of June, if it wasn't going on all four cylinders immediately. That's when the market normally slows down. So a lot of the buyers that would have come out in the woodwork in 2020 delayed their purchase until 2021. So you're now comparing it to an all-time record high. So let's look at the data. I normally don't look at closings in this kind of detail, but I went back to closings in February for all 9 Bay Area counties. Now, you know, I normally only look at 2 counties, but I went out and did all 9. The biggest decrease I could find was 14% in Santa Clara County. And you can just see from the slope, steepness of the line, Santa Clara County, the gray line is Contra Costa County, Alameda County is less, but Contra Costa is pretty steep. And then you come down to these, and the yellow is the steepest at San Mateo County. And I think that was actually 16%. Here you can see this line down here, which is Napa, is basically flat. These are all flatter slopes, so they had a less decrease. So the biggest decrease I can find is a fairly small community of Napa or county of Napa, and its decrease was only 14%. I didn't do an overall, and you can see the huge increase that just last year had. So this is February 2021, and then this is February 2022, which they're basically saying the sky's falling with a 20% decrease. But if you also go back and look, you can see that you have to go all the way back to like 2013 to get a higher volume of transactions. And you have to remember, in general, the trend for the more expensive communities has been downwards, because as people get more and more benefit from Prop 13, they're less and less likely to sell. Moving on and looking at the numbers, now, if you go back to January offers accepted, these were actually low in Santa Clara County and in the whole 9 Bay Area counties. You had the lowest in 2022 than the first week. The second week was the lowest. The third week was the third lowest. The fourth week was the fifth lowest. And the fifth week was the second lowest. But now if you go into shoppers in February, guess what? It was the second best year we've ever had in the last 8 years. So it's the second best out of 8 years. And you had a reason why 2021 was a standout year. So frankly, we're in the best year you'd expect. And then if you go forward to present day, after the world uncertainty and after the increase in March, the second best, the fifth best, the second best, the third best. And this takes a little bit, you know, I should have the firm data, right? Agents are slow in reporting. So the data as of this morning was 1,051, which is basically very close to this 1,063, 1,078. So I think when I get corrected data for early next week, this will come in somewhere between 4th and 6th place. So again, the earth is not falling apart. We're not going anywhere. It's still a strong marketplace. And if anything, I'm more confident than ever that we're actually hitting, in Santa Clara County at least, we're hitting an inventory limited demand, which means there just isn't enough properties for people to buy in Santa Clara County. And this is just a quick recap from leftover from last week. And this was a slide I did. And basically, a previous article talked about the increase of interest rates from 3% to 5%, 67% increase. That only results in a 17% decrease in purchasing power. And that's because the amount of principal goes down, your taxes go down because the purchase price goes down, your insurance stays the same. So to have the same payments, you only lose 17% of your purchasing power. And with that, we'll get back to the URLs here. The green is what I call my root URL, and that takes you to the archives of past presentations on YouTube. If you add 2022 to the root URL, you get to the live presentation Saturday morning. Add in the letter H for handout and the 8-digit year, month, day code. So that would be 20, 22, 04, 09 for today's handout, and it is posted. And to get to any specific episode, you put that in. Does anyone have a question for me this morning? Not seeing anyone unmuting themselves, I will proceed. So now we're looking at the breakdown of the different micro markets. Again, you have the three key components: days of unsold inventory, the frequency of overbidding, the magnitude of overbidding, and then finally, just out of a point of interest that everybody likes to follow, the sale price. So you can see your DUI in all the areas remains very strong. The slowest area we have is the expensive areas in San Mateo County at 45.5. So it's going to be white in color. Everything else is a shade of red. The darker the shade of red, the faster the marketplace is. Looking real quick, I think the fastest I am seeing is 13 in single family homes. Condos are actually outperforming single family homes with 11 and 10 and basically tied at 13. Now, if you look at countywide, it's not outperforming countywide single families, but the more rapid areas are outperforming, which is pretty amazing to see that. Then if you move over to frequency of overbidding, in general, these numbers have come up. Redwood City was at 100%. You can see it's now down to 96%. That's still amazingly strong, but now you have other challengers. The moderate priced areas, Campbell, Cambrian, Willow Glen, and Santa Clara, are sitting there at essentially 96%, tied for almost essentially tied with Redwood City, a little bit lower. And that's the bread and butter of Silicon Valley. 94% for the affordable, more affordable, lower moderate areas, which are Santa Teresa, Blossom Valley, Milpitas, North Valley, and even the affordable areas are at 90%. The lowest area is probably South County, up at 87% of the sellers getting overbidding. You go into San Mateo County, it's also very rapid countywide. It's at 90.4% that we showed earlier. Condos are at 90% overall in Santa Clara County. And in the Bay Cities, you can see you have 80 and 83%. The magnitude of overbidding, this is pretty amazing. I'll point out, and I'm not 100% sure, but I'm just not sure on the second digits, but there was one property that sold, I believe the exact number was 227% of the seller's asking price. So more than double the seller's asking price. I didn't take the time to look into that, but typically when I've seen things like that, it's a property priced at $999,999 and it's worth $2.5 million and it sells for 2.4 because a lot of people who would have paid 2.5 never saw it down at $1 million. That brings up one of these micro market areas, and I think it was in San Mateo County, but I'm not positive. But you can see across the board, it's pretty strong. You can see Santa Clara at 117.6%. That's down a little bit from the peak, but still nothing you can sneeze at. You know, just since we talked about closings in February, these are closings last week. So this data is much more current than what was in the Mercury News. And then you come down to condos and townhouses, not as strong, but clearly in the one teens, 110% to 112%. You got 109% in San Mateo County. And then the prices over here, the middle numbers, the median county is in thousands, micro markets are in millions. The number to the left is the cheapest 10 percentile in that particular area. The number to the right is the most expensive 90 percentile. So you can go up and down. In San Mateo County, Redwood City is typically the median for the area at $2,530,000. It is now, but you can see that it's very close to Redwood Shores and it's pretty close to even the Bay Cities. These three are very close together, which is why the shading is fairly uniform. I can pick up the pink here a little bit. I do not pick up any pink down here in Foster City. And then by the time you get up to 2.8 million, you can really start seeing the pink come in. When you go down to condos, there's not as many different varieties. So I basically set the most expensive to white arbitrarily. And then the cheapest goes saturated blue, and then I break up the areas in between. Now what we're looking at is the number of new listings coming on the market every week. The blue line is the raw data for this year. So and here's where you'd expect it to be. So you'd expect it to be somewhere around 575. You're actually up somewhere around 650. So this past week, we had more inventory come on than you'd expect. I didn't look at the calendar when Easter was last year. Next Sunday is Easter. So there's going to be less listings typically come on this week because of the holiday weekend than normal. So the fact that this may drop down next week is not surprising. Easter can come quite a bit earlier than the middle of May. It also comes a little bit later. I don't know the extreme off the top of my head, but every holiday negatively impacts real estate. So it's important to do keep track of it. But the overall takeaway is you can see the number of new listings coming on the marketplace has been above the 5-year median. Here's the total inventory. The total inventory has been below the 5-year median. And again, we'll see in the next slide that it's the surplus demand that's eating up the inventory, because if you have more sellers coming on the marketplace, you'd expect more sellers to be on the marketplace, except there's more buyers to take care of those extra sellers. And so we actually have less inventory than we would expect because of these extra buyers. So it's a buyer-driven demand. Here's days on sold inventory, the single biggest indicator of the marketplace over time. You can see the slowdowns for this is the COVID slowdown. Here's your New Year slowdown. So that was almost insignificant compared to your COVID slowdown. Here's your New Year slowdown, and here's your New Year slowdown. So would you rather have a New Year slowdown or a COVID slowdown? And basically from the impact on the marketplace, you'd rather have a New Year slowdown. Here's the days of unsold inventory plotted out on a map for you. The redder the color, the hotter the marketplace, which is the lower days of unsold inventory. And the only white area is, again, the expensive areas in San Mateo County. Here's that frequency of overbidding over time. You can see we're basically in 2022, I would say we're at 90% of overbidding. For 2021, the number was basically 80%. So we're having 10% more sellers getting over their asking price this year than we did last year. This is the frequency over time. And you can see up here, we're basically a record high. These are record high numbers. It may not be a record this week, but it's all record high territory. Basically the previous peak was back here about 83, 85, and now you're 7% higher than the previous peak. So that's significant. Just like this number here at 70%, that wasn't a peak. I think we actually had 80% back in the past. So this was the first record. Then we came back down a little bit, and now we're setting a new record up here that's going to be almost impossible to meet. Here's the frequency of overbidding geographically. You can see that even though the expensive areas in San Mateo County are a cool marketplace or a balanced marketplace, they're still getting overbid. They're getting overbid. 76% of the sellers are getting more than their asking price. This is the magnitude of overbidding. And again, over time, last year, you were basically somewhere around 8-9% overbidding. You can see towards the end of the year, some of that overbidding came into the 2021, which happens occasionally. So you got up to 10%, but then boom, once you got into the closings for 2022, you went from 10% overbid to 16% overbid. And that's the typical overbid. And this is the average overbid. The median's going to be a little bit lower. Normally the median would be a better indicator, but in this case, the median would often be right at 100% and not be able to tell you anything for a long time. Big shifts could happen when you have a roughly balanced marketplace. And that's why I made the conscious decision to use average, even though it tends to be a little bit misleading at times if you don't pay attention. Overbidding by magnitude over time, you can see we're at record high numbers up here. You're down in San Mateo County from the record high. It might have been 116%, and now you're at 115.5. Santa Clara is close enough to flat that I would still call it flat. The condos in Santa Clara County look like they're still going up. Here's the overbidding geographically. Again, the redder the color, the hotter the marketplace. This is sold price over time. A lot of people like to follow it. I normally plot the 10 and 90 percentile also, but you can see once you started getting the 2022 transactions closing, this went up pretty rapidly. This is a 5-week average here, not just the 1-week average. This is the median price over the map in the different areas. So you can see how the whole peninsula area is sort of your median priced area for the region. Cupertino, Sunnyvale is just slightly higher than Saratoga, Los Gatos, and then the San Mateo, Santa Clara County border. You can also see the lowest areas, which are basically East San Jose, Central San Jose, South San Jose, Half Moon Bay Coast, Daly City, and South County, followed by Evergreen and Santa Teresa, North Valley and Berryessa. And then up a bit from that is the moderate areas over here along 880, Campbell, Willow Glen, Cambrian, and Santa Clara. Here is the appreciation. And again, these are all benchmarks off of 2020. So you have countywide 40% appreciation. The yellow highlight shows when it's at a new record. So you can see most of the areas are to the left. Some of them are back here right at the end of February, beginning of March. Santa Clara County single family homes are pretty much all right now currently happening. The San Mateo County base cities is happening right now. There's can be close ones, but if it's tied, like here you had 35.1 and 35.1, I highlight the oldest of the two, but I don't think I have any ties currently. Yeah, there's no current ties that I'm seeing. This is looking at April data, and you can't have April data. That's correct. April data only through last night at midnight, the 8th at midnight. I'm reporting it on the 9th. Normally, I don't report this until May the 6th, but again, it gives you some indication of what's going on. There's some of this data that's going to change dramatically. Some of it won't change much at all. Average and median days on the market and DUI, I don't expect to change much. And basically, so what you can do now is look at these numbers and say these are record lows except for 2020. But in 2020, the only reason the days on market are so low is the MLS with the announcement of COVID stopped counting days on market. So we were by the time we got to May 6th, going back 5 weeks. So basically the month of April of 2020, half those listings that sold, more than half those listings that sold were put on during the pandemic shelter in place and were selling. And that's why the crossouts, that's basically a bogus number. It's an accurate number, but it was misleading at the data source. Really at 7 and 10.7, that's going to be a record low if it maintains. It might catch 8, that's very close. This could be 7.51. This could be 7.9, 7.49. So they could be very close together and you wouldn't know it by only single digit. I use single digit because the median is the middle data point and there's only whole days. I guess I could count the hours and things like that, but that's getting pretty ridiculous and I already go overboard. DUI is probably going to remain pretty unchanged. And if it stays anywhere close to this level, it'll be a record low. Number of sales, you expect that to go up fairly significantly. So it's already better than most of these years, or at least close to it. And the reason I say it's going to go up is each week we tend to sell more homes than the previous week until we get to the end of May, and that's when it plateaus. So we're only going to get to the beginning of May, so I'd expect this number to come up quite a bit. Overbidding magnitudes, no real power trend, and these are record high numbers, as you can see. So April is outperforming what you'd expect it to do. And then the prices, frankly, at this time of the year, it's normally stagnant, but typically you'd expect prices to go upwards. But at this time, I'd predict a flattening of the prices. And then this is the same data information in different data set. We're now comparing data as of April 5th so that we have comparing apples and apples. So now you can look at inventory and show in Santa Clara County, you had record low inventory. So is that part of the reason why we're having a decrease in the number of sales? Last year, you had an extra 20% more inventory for buyers to buy from. You come down to the speed of the market, 11.7, tied for 2020, but remember that could be artificially low because of the COVID. So if you compare it to all the other years, this is basically a record year. And I think that's a more accurate comparison. If you look at sales volume, 34.5. Yes, we were down from last year, but I mean, you have to come all the way back to 2015 to beat it. And in general, the trend has been down, because if you come back, look at these years back here in 2006, 50, 40, 35, 48, 51, 48, 47. We don't have that kind of volume any longer. And it's been on a downward trend ever since I started keeping the data in 1998. So there's something fundamentally going on that's causing the available inventory to be less each year, even though there's more and more structures. And the thing I come back to is Prop 13. Sellers are getting bigger and bigger financial incentives to stick place, and they can't sell without having a huge capital gains hit that they have to do something with. Now, new buyers that are buying in because of Prop 19 won't get locked in, but we now have a whole generation of people that are essentially locked in by Prop 13, and they'll stay locked in, most of them, until they pass away. And then you go down to closings and you're overbidding at 17% above asking price is an all-time record high by quite a bit. Your previous record was 12.6%. 92% of the sellers getting more than asking price, again, outperforming the 83% by quite a bit. And with that, I'm done with my presentation. I'll pause and see if there's any questions. If I don't have any questions, I'll invite people to come back next week. Any questions from anybody? All right, take care. See you. Bye.